Hi friends, good day. Welcome back to my YouTube channel. And in our investment playlist, we've already covered mutual funds and stocks. And for today's video, we're in for another learning treat as we will discuss another asset class called the fixed income security. So fixed income security is an investment that provides you a steady stream of income in the form of coupon interest or dividends. So some of the examples of fixed income security include time deposits, savings deposits, corporate bonds, government bonds, bond mutual funds, fixed income exchange traded funds, and to some extent, REITs or real estate investment trusts. If you remember in our 7 streams of income video, which I will show up here, or be linked in the description below, the interest income and dividend income are the 6th and 7th stream of income. And they are used for wealth preservation because they have lower risk compared to the other asset classes or income stream. And for today's video, we're going to focus in one particular fixed income security, which is bonds. So let's define what are bonds. So bonds are a type of security under the fixed income asset class, and they are debt securities issued by corporations, governments, or organizations sold to investors. These bonds are issued by corporations to raise capital either for business expansion or retirement of old debt. They are also issued by government to create a funding source for government projects. The ultimate objective of these bond issuances is to generate more income sources in the long run. Because bonds are debt securities, those who bought the bonds are entitled to fixed interest called coupon interest. For example, let's use the recent bond offering of the Philippine government, which is called the RTB29 or the Retail Treasury Bond 29. It's the 29th RTB offering of the Philippine government, which carries a coupon interest of 6.125% per annum, and the interest is paid to the investor in a quarterly basis, which is paid every 3 months. The initial investment or the principal is paid back to the investor upon maturity of the bond, which in the case of RTB 29, it's set by the government at 5.5 years. And this brings us to the parameters to check before investing in bonds. I already mentioned the first two, which is the coupon interest rate and the maturity. These two parameters are the most important parameters for retail investors like us because these are hinged on our financial requirement and risk tolerance. Now let's dig deep with each one of them, and let's begin with the coupon interest rate. Coupon interest rate is the interest you get for buying a bond. For example, if you invested 100,000 pesos in RTB29, your indicative annual gross interest is 6,125 pesos. Which means that as an investor, you will be receiving a quarter of that every 3 months or 1,531.25 cents. We should take note as well that bond coupon interests are subject to 20% withholding tax, so the net interest every quarter is set at 1,225 pesos for every 100,000 pesos in RTB 29. The second parameter is maturity. Bonds are classified according to its tenure or maturity. Bonds may range from 2 to 10 years holding period. This means that the principal you invested is locked for that holding period. If you have the appetite to hold such security for that period, then bonds would be suited for you. But there comes a risk here. The risk of the company not being able to pay the interest or issue the principal back to the investor. Which brings us to the next consideration. The third parameter to check is the quality of the issuing body. As a bond investor, you should only invest in companies that are most likely to pay on time and regularly. One way to check the credit worthiness of the bond is to identify its bond rating. The PRS, or the Philippine Ratings Services Corporation, issues ratings that assess the obligor's capacity to pay any specific short or long-term securities including commercial papers, asset-backed securities, and bonds among others. For short-term issuances, it is rated in the range of PRS 1 to PRS 6, with PRS 1 as the best grade rating, while for long-term issuances, and this is where bonds fall. It is rated according to this. PRS AAA rating is the best grade rating, and we want to have this kind of rating to reduce the risk of being defaulted in our bond investments. And the fourth parameter to check is whether the bond is secured or not. Secured bonds are bonds that is backed by issuer's pledge of a specific asset. Two examples of which are the mortgage bonds and equipment trust certificates. Mortgage bonds are backed by real estate holding or real estate property, while equipment trust certificate is secured by an equipment or physical asset. And those are the four basic parameters before investing in bonds. I already gave you the overview of bonds as a fixed income security and the considerations before investing into bonds. In the next video, I'm going to compare bonds to stocks and to bond mutual funds. So that's it for now. I hope you guys got some ideas and tips in investing in bonds. And if you have questions or clarifications, comment it down below and I would be glad to answer those questions. So have a great day ahead and see you in the next video. Bye-bye!